Have you ever stopped to wonder how your bank, that fortress of finance that guards your savings, actually makes its money? It's a question that peels back the layers of a system we use every day, often without a second thought. While they offer us free checking accounts and convenient services, the reality is far more complex. The banking industry is a multi-trillion-dollar machine, and its fuel is, in many ways, our money. Understanding this mechanism isn't just for economists. It's essential for anyone who wants to navigate their financial world with greater awareness and control. The most fundamental way banks generate profit is through a concept known as the interest rate spread. Imagine you deposit your paycheck into a savings account. The bank pays you a small amount of interest for letting them hold onto your cash. In turn, the bank doesn't just let that money sit in a vault. They lend it out to other customers in the form of mortgages, car loans, or business loans, but at a much higher interest rate than what they're paying you. This difference, or spread, between the interest they earn from borrowers and the interest they pay to depositors is their primary and most reliable source of income. It's a continuous cycle of borrowing low and lending high, a foundational pillar of the entire banking business model. Beyond the interest spread, banks have developed a vast array of other strategies to bolster their revenues, many of which you've likely encountered directly. These are the fees: overdraft fees for when your balance dips too low, monthly maintenance fees just for having an account, ATM fees for accessing your own money, and wire transfer fees for sending funds. While each fee might seem small on its own, they add up to billions of dollars in revenue across the industry. Furthermore, banks are major players in the investment world. They use their massive capital reserves, partially funded by customer deposits, to invest in stocks, bonds, real estate, and other financial instruments, generating significant profits that are entirely separate from their core lending operations. The scope of banking profit extends far beyond domestic borders. In our globalized world, international transactions are a goldmine. When you send money to another country or use your card while traveling, the bank facilitates the currency exchange. They do this by applying a markup to the wholesale exchange rate, essentially selling you the foreign currency for a little more than they paid for it. This markup, combined with explicit international transaction fees, creates a lucrative revenue stream. Behind the scenes, banks also lend to each other on a massive scale through the interbank market, earning interest on short-term loans that help balance their daily books, further adding to their complex web of profitability. As technology reshapes every industry, banking is no exception. The rise of digital banking, mobile apps, and online services has opened up new frontiers for profit. While these platforms offer undeniable convenience, they also serve as powerful data collection tools. Banks analyze your spending habits, transaction history, and financial behaviors to create detailed customer profiles. This data can be monetized in several ways, from offering you highly targeted products like a new credit card or personal loan, to informing their broader business strategies. They also partner with fintech companies to offer innovative services, often taking a cut of the revenue and expanding their ecosystem in the process. So the next time you tap your card or check your balance online, remember the intricate system working behind the screen. From the simple interest spread to complex global investments and data monetization, banks have engineered a sophisticated machine designed for profitability. This isn't about demonizing banks. They provide essential services that underpin our economy. But understanding how they operate empowers you. It allows you to read your bank statements with a critical eye, question the fees you're being charged, and ultimately make more informed decisions about where you put your money and how it's being used. In the world of finance, knowledge isn't just power, it's profit.